FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 4/24/19. Well, you know that things are just inexplicable, that there is no way forward in so many ways, and yet we have to move forward. And the question is, how do we do it? Well, as always, we invite you to be a part of the show. Email us, kl@kerrylutz.com. So Eric Hadek is with us now from Inside Track. That's inside, INSIIDE track.com. And Eric, as always, it's great to have you. So the market's going to new highs. How can this be happening when everything else seems to be in the dumps?
Well, I think there's a lot of potential reasons for that, but as you know, I'm always looking at the technical and the cyclical outlook, which reveal what's going on. It's not just hocus pocus of numbers or time frames, but it's a clock to the market, revealing the rhythms that are there. And the equity markets in particular, from a broader perspective, nothing has changed about the outlook for 2019. And my general outlook that I've talked about since late 2018, early 2019 was that the markets were poised for a 6 to 12 month bottom in late 2018. And that should yield to an overall advance into May of this year, when one of the prevailing monthly cycles that helped time the September-October peak last year would come back into play. And the interesting thing is, whereas a lot of the intermediate cycles vary from index to index, stock to stock, depending on what their specific rhythms are in the market, this is one of those cycles that has governed everything from global equity indexes, the European stocks indexes, which helped pinpoint the September 2018 peak and looked forward from there to the next high in May of 2019, and it's governed a lot of different equity markets. And the interesting thing to me too is that last year I talked about the energy equity connection, just that how at the major turning points, the oil markets and the stock markets seem to move in tandem. And that was the case in September, October of last year, then again in late December. And cycles are shaping up to show the same thing for May of this year, where also crude oil cycles are projecting a top. So it could be something related to that as well.
So you're thinking that oil is kind of coming to a peak here, because I don't know if you've been to the pump lately, but it's over $3 a gallon here in Florida. So it's telling me it's starting to bump up against that ceiling, huh?
Well, there still is a little time left in the cycles, so that's when I really need to get down to the day-to-day and week-to-week price action and see what that is portending for this time frame. But there still is some leeway and potential there for a little bit additional highs before a peak is seen, but we're certainly coming to the latter stages of those cycles and of this uptrend.
Mm-hmm. And so these cycles, is it unusual for a lot of cycles to peak at once? Does that happen often?
Well, like I said, if you're referring to what I was commenting about the different equity markets, it's more a case of when we have those bigger cycles, when there are more significant turning points, then you almost want them to come together, to converge there in a narrow window of time. But a lot of times you'll see a sequence of kind of diverging cycles where a particular index, or when we're talking about something like the metals, gold and silver and platinum and copper, often will peak or bottom sequentially, where one sets its major high or low, then maybe a month later, that particular one rebounds to a lower high, but another one rallies to its major high. And I often equate that sequence to like a roller coaster going off over the summit, where each car peaks at a different time before the big descent takes hold. And so that's what you see a lot of times, but it really generates more attention and triggers me to stand up and take notice when several of them are all coming together at the same point in time. And that often is when it's kind of giving an omen of some sort of more significant fundamental or geopolitical event that could turn markets all at once.
Mm-hmm. All right, so let's go down the markets. So stock market, what's ahead of us here?
Well, I think that we're just going to see a lot of multi-month swings throughout this year, and I've equated that to even looking back at 40 years ago when I talk about a 40-year cycle, and I only use that as a very broad stroke or general comparative measure, but equating to a market like we saw in the late 70s, where, and that too had come a few years after a major downturn in the early 70s. And so you saw something where there were multiple 15 to 20% declines in about a 3 or 4 year period, but each one of those was separated by significant rallies that would often take the market back up to its previous high. And there's been a lot of things coming together in late 2018 and reinforced in early 2019 that just confirm that potential to me, that I don't expect to see some 1 to 2 year trending market in equities, but instead just these 3 to 4 month swings in both directions. And so I think that's going to continue through the year and even into early 2020. And we'll probably see some pretty significant resistance encountered in some of the lagging indexes that haven't reached their September, October peaks yet.
Mm-hmm. Interesting. All right. So let's take a look at precious metals real quick. What are you seeing there? I remember seeing one of your reports a few months ago. You were more or less neutral for the rest of the year.
Well, I think the report you're probably talking to is the one that came out on February 20th and was called Precious or Gold and Silver 2019, a cycle crescendo, saying that we had just gone into the culmination of some cycle highs there during the week of February 19th to the 22nd, and that peak should hold for several months. But that doesn't mean that I'm anticipating a new downtrend. It just means that we'd seen the culmination of gold's rally since August, and that it was going to take several months of some consolidation to kind of set a higher plateau and prepare for another leg up later on in the year. So I do think that we are in a developing uptrend. Another report that I'd done back in September of 2018, talking about a major bottom, was explaining how the overall uptrend was expected to last into late 2020 or early 2021. So it's in that context that I'm talking about a multi-month peak here, some consolidation. And actually, when we hit that peak in February, and the 3 to 6 month trading strategy that had been published in our publications was saying to get out of long positions, the price levels that were given to start to re-enter long positions have just been hit in gold. Silver has not quite hit it yet. So it tells me that the correction has done much of what was anticipated from it, and that over the next couple of weeks we should see a bottom forming here and start to prepare for a new 2 to 3 month, maybe 3 to 6 month uptrend. But it would take some time before it would break out above those late February highs.
Interesting. So dollar, you pretty much called it. It's been kind of trading in a channel, but going up a bit higher. What are you looking at for the dollar?
The dollar keeps hanging on up here. I really thought that it would start to sell off a little sooner than this. We peaked in November, really, and retested that in December, just below the 98 level in the dollar index. And with the amount of times we've tested that, it wouldn't be surprising to see a brief spike through it. But I've been anticipating a bit more of a corrective move in the dollar, a little bit more of a sell-off, which has not materialized yet. So I'm certainly watching it to see if there's something I've missed, something I'm wrong on, or if it's just timing is really dragging out here, because it's pretty interesting for it to stay in a range like this for this long, and so the next couple of weeks are critical where that's concerned.
Interesting. Okay, so we talked about oil. You think that's going to pull back a bit, huh?
Once it has set that peak, which, like I said, I think is still a little bit in the future, but I think we are really vacillating between multi-year highs that were set in September, October of last year, and what was projected to be a 6 to 12 month bottom in late December, early January. So I think it's confined to that trading range through the rest of the year.
Yeah, interesting. And what else? What other markets you're looking at that we should think about?
There are a lot of the primary ones. Just trying to think interest rates and right. Bonds and notes are one other that I've been looking for a slow, steady rally into early June. So that would mean slightly declining rates, or at least the perception. The actual physical rates may not drop via the Fed or anything, but their perception swings that way. And if bonds and notes can rally into early June, then I think that they would be primed for a new leg down, which would be the potential for a new bump up in interest rates. And that may factor into some of these other things that we're talking about.
Yeah. So what about the economy as a whole? You have any thoughts about that?
Not any real strong ones. That's not my strong suit. So I'm probably better off just sticking with the specific markets that I feel more comfortable analyzing.
Sure. And we can glean our own ideas from the projections that you're making there. And yeah, it's, things never exactly go the way you intuitively or intellectually expect. There's always a monkey wrench somewhere. I don't know, not to get political here, but the whole Trump administration kind of turned out much differently than anybody really expected.
Yeah, I think every few months you get curveballs in both directions. One time it looks like the forces working against him are gaining some synergy and gaining some momentum, and then all of a sudden that swings on a dime and things start to look very favorable, and then back and then forth. There still are some major things that are overshadowed by the political news. You still do have the U.S.-China trade challenges, conflict going on, and no real complete resolution to that yet. That's one of those things that, when you least expect it, when the market and the news is quiet, all of a sudden you get rumblings out of those negotiations, positive or negative. The last couple of months, that most of them have been slanting positive. And then you have your global geopolitical things going on too, like the recent ramping up of the Iran sanctions towards the other countries doing business with Iran, and what's that going? Each time that the heat is turned up on that, is it going to spur anything? I've done a lot of analysis when I talk about this 40-year cycle. It's very intriguing to me what went on during 1979, 40 years ago. And starting in April of 1979, where Iran is concerned, and their elections and the coming to power of Ayatollah Khomeini and the Iranian Revolution, and then leading to the American embassy hostage taking and an oil crisis. And the funny thing is that 40-year cycle has timed Middle East challenges, shall we say, going back hundreds of years. And so that's another thing that's just kind of on my radar. And I never expect it to be anything even remotely like what it was during the previous cycle, but something still related to the Middle East, something still kind of signaling that ongoing shift in geopolitical power. And so this period, starting in April of 2019, is when I'm starting to look for the different rumblings there. And, it's even intriguing when you start to hear the murmurings about Jared Kushner and company getting ready to put forth an Israel-Palestinian peace plan. I think for June is what they're talking about now, and how that would be received, because that could, you could get two polar opposite, diametrically opposed reactions to something like that. Yeah. So I think that the Middle East is certainly a place to keep our eye on for the remainder of this year.
Yeah, that makes sense. All right. Well, hey, thank you for the insights, and just tell us all the sites where we can find your work at.
Well, InsideTrackTrading.com is our primary site, and as you mentioned before, it's got the extra I in the middle, INSIIDE, tracktrading.com, and 40-year cycle with the numbers 40-year cycle is where we archive a lot of previous analysis, posts, articles that that deal with this 40-year cycle that I'm often discussing.
All right.
So they're the two primary places to go.
Great. And as always, you'll find a link in the show notes to Eric's sites. And questions, comments, email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Eric, it's always a pleasure. Good luck. We'll talk to you in a month.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.